everybody. Hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. So look, this is just a quick little video idea on the UK CPIs and PPIs, which are coming out tomorrow, in addition to the retail sales. So I'll want to pick up on a few pound pairs on this one. So hey, stick around. We're going to quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. So look, I'll give you a few seconds to read the rest. Basically, apart from other big stuff, I mean, we have the RBNZ interest rate decision as well during the early hours of the Asian morning. But during the European session, yes, in the morning we're gonna get the British CPI, PPIs, and retail sales numbers. So for all those pound traders, this could be something of an interest. Look. Also, before we jump into the calendar and the charts, I just wanted to quickly share with you our website, which you can always check out for more information about us. Feel free, yes, check us out here. We'll be more than happy to assist if you reach out to us. So now, oh, there we go. I'm getting my voice back. So economic calendar, there we go. So core inflation, headline inflation, yep, PPI, both core and headline as well. So let's start from the beginning. Core year on year is expected to increase a little bit from going from 3.2 to 3.6. The headline is also expected to increase as well. So this is quite interesting. PPI, for the PPI month on month, actually the headline one is also expected to increase. So look, what can I say? For now, we're seeing what we're seeing here, and retail sales as well. Everything is expected to increase. Now, what's interesting here about this is because recently we got the Bank of England interest rate decision, and by recently I mean at the beginning of this month, February, we got the interest rate decision. They decided to cut the rate by 25 basis points, going from 4.75 to 4.5 now. Certainly this of course kind of is in a way a negative thing, or theoretically should be like a negative thing for the currency here. But as you can see from GBP situation, we're seeing a bit of a push higher. Now, initially we did react negatively on the news, but then it stabilized, because mainly I think that at this point everybody's kind of looking at the US dollar and what's happening there, and so far the US dollar here has been on a move lower, and it broke out below some key support levels, currently resting on the 100-day EMA, and in a way there is a chance for this one to actually drift further south. So if we do drop below the 100-day EMA, the next target here on US dollar index on DXY is the 200-day EMA. Now, coming back to the situation with the pound against the US dollar, look, we also cleared a key area of resistance, which is around the 1.2523 zone, or actually 30-ish. In general, we cleared the 50-day EMA. We traveled to the 100. We're now, it seems like we could end up testing the 200-day EMA. For me to get very bullish on this one, I need to see a push further above all these EMAs, and then yes, I will start examining even higher levels. If I do apply my beloved Fibonacci here from the highest point of September of 2024 to the lowest point, the current lowest point of this year, we'll see that we're currently resting around the 38.2, which is fine. So in a way, it's kind of, if we do remain above that 38.2, we could end up traveling towards that 50% on the Fibonacci retracement. Of course, I'm not talking about the 61.8 and the 70.5. Yes, all good. However, let's go step by step. And the fact that we are seeing and we are expecting slightly higher inflation numbers, yes, that in a way could play out positively for the British pound, especially if the US dollar remains kind of on slightly weaker side. Then certainly we could see some higher levels here on GBP USD, for example, right? And another thing is that also if we do see, let's say, numbers which are coming out the same as expected, because they're already on the higher side, for example, the core inflation, which excludes food and energy, is already expected to come out on the higher side, so quite significantly. So the thing is that even if we get the same number as forecasted, or maybe a little bit higher, then yeah, I mean, that could be, like I said, a positive for the British pound against the US dollar. And because, again, this would, in a way, could potentially, theoretically, push the BOE from cutting further. However, we understand that the BOE is kind of in this cutting mode right now. It's kind of playing the catch-up game, or I would say, and it's trying to like, yeah, lower down the rate as as low as possible. How, in order to maybe be able to start hiking later on, because inflation already started picking up, and we're shifting away from the 2% BOE target, as we know. We're shifting away from that, and I mean, like I said, it seems like the BOEs, despite the fact that inflation is picking up, they're still, in this cutting mode, and I think that they would just want to drop the rate as low as possible so that they would be able to start hiking it again. So, it's always better to hike from from a lower number rather than from a higher, right? So that's what I'm saying. So, of course, like I said, we'll keep an eye on all this. If inflation here, let's say, comes out slightly lower than the forecast, let's say it comes out still higher than the previous, on both sides here, on the headline and the core, it comes out higher than the previous, but let's say lower than the forecast, I think that this could still play out negatively for the British pound. If the British pound against the US dollar here, if the US dollar remains somewhere at the same level or something like that, somewhere like, let's say it remains somewhere above this 100-day EMA, it doesn't push higher, but still somewhere balances around here, I think this could, like I said, the lower than the forecast inflation could be a little bit of a negative thing here for GBP USD. Of course, this is all theory. I have to say all the time to people the same thing, that wait for the numbers to come out, and then you can do something about it if you feel comfortable about it. So that's the logic. I'd rather play the reactive game instead of like trying to predict it. Because again, volatility might take you out. We might see an unlogical move to the upside or an unlogical move to the downside. This way, a lot of traders get taken out, and a lot of suffering then. So be careful, be cautious, don't rush. I mean, like I said, wait for the numbers to come out. Looking at other pairs here, look, GBP, JPY here, it's quite an interesting one. This one looks a little bit more positive, to be honest, because it seems something like a bullish flag formation here from the very short-term perspective. For me to, let's say, get comfortable with the downside on this one, well, at least a drop below the 187 territory would be needed here. This way, yes, we could do something like this, but at the moment, it seems like there is a chance for this one to pop higher, and if we do pop above this 193 zone, at the same time, we might clear all the EMAs here on my daily chart, and we could start aiming to the upside. My only little problem is this little short-term downside line, which could be a little bit in the way. GBP Aussie and GBP NZD, by the way, so GBP NZD is actually an interesting one here, because look, we have, before the CPIs, we will already get the RBNZ interest rate decision, and I did a video on that, so you can check out our YouTube channel for RBNZ interest rate decision, and yeah, you can go from there. But at this point, look, from the technical perspective, what I see here is that this pair, GBP NZD, is still stuck above all these little tentative upside lines. But if we start clearing at least the first one here, then I'll go slowly to the downside. I'll aim for the second one, and then if we break that one, I'll go for the third one. That's in terms of the downside. But at the moment, because we're above all the trend lines, in a way, we cannot say that we are bearish. We cannot say that we're bearish. We are actually bullish. As long as we stay above all those lines, we need to continue to consider upside scenarios. So, but for me, preferably a push above the 1.22 zone-ish somewhere. This could, open the door to some slightly higher levels, and then we could go from there. And finally, GBP CHF, I like this pair as well. We're currently on the positive side. However, lately we have been ranging here, and we have been moving sideways. So it's if you like activity like this, okay, great, I'm happy for you. But for me personally, I mean, it's kind of a range here, so I need some sort of like stronger moves here above this 1.1360, something like that, 68. And or even better, maybe just to finalize this, a push above somewhere above this 1.14 zone. That could be a better option, and if we can clear that 1.14 zone, this is where I will consider a move further north. But again, at the moment we're in the range, so hopefully the CPIs, the British CPIs, can move this one, and we can see some moves to the upside. However, if we don't, if we start falling back below all my EMAs here on the daily chart, the 50, the 100, and the 200, which, as you can see, almost kind of coincide with each other, then I'll consider a move towards that 1.10, or the area slightly below the 1.11 zone. And then we'll go from there. Ladies and gentlemen, I hope you found it useful. Let me know in the comments what you think. So I tried to squeeze as much information as possible into this 10, 11 minutes. But yeah, I hope you found this information useful. Thank you very much, ladies and gentlemen. Subscribe and like, and do comment, and let me know what you think about the UK CPIs. What do you think, where it can come out? So thank you very much. I'll see you later. Bye-bye.